Fox. If I was muted, I don't know what happened there. Let's try that again. Happy Friday, everybody. Welcome, welcome. You're listening to the Entrepreneurial Web. I'm your host, Jeremiah Fox. Happy July. We made it. It's summertime, finally. If you're a parent of a child that was in school or you're a student yourself, time to relax. I'm married to a teacher and I got school-age kids, and it's been so nice to just let it all go. New York is back open, almost 100% open. You can run around freely. It feels really great. And if you made it this far, you deserve to pat yourself on the back. Before I bring my guest on, the message of the week, I've said this many times. It's a message I will share till my last days because it's so effective. It's a piece of advice I got from one of my mentors, Anthony D. Silvestro, also known as Tony D. He said this to me a long time ago. He said a lot of really great things to me and I ignored most of it, but this one stuck with me and it'll really lay the foundation for today's show. And he told me a long time ago, he said, it's better to own 20% of 5 things than 100% of one. I think today's guest will agree with that, and we'll expound upon that ideology as it applies to business ownership, investment, entrepreneurship. With that, I'd like to welcome to the show Amit Gaglani, zooming all the way from Hawaii. It's bright and early there for you, isn't it?
Yes, it is, and it's great to be here. Thanks for allowing me to share my story and my wins with everybody. I appreciate it.
Yeah, man. Pleasure to have you. Thanks for getting up so early. You're 6 hours behind, right?
Yeah, it's pretty early here. Yeah. It's like 6 a.m., which usually isn't so bad, but when you're on vacation and you're enjoying yourselves in Hawaii, it seems a lot earlier.
Yeah. So that's a great, way to start the show. He's vacationing in Hawaii, largely based off of income derived from some wise investments. Is that correct?
Yeah, some passive investments. I decided to take my family here for a month. So we've been enjoying ourselves for a month all over Hawaii. Yeah, it's funny. We run into people and people say, "Oh, so how long are you here?" Thinking we're here for another few days. We're like, "No, we're here for a month." They're like, "A month?" We're like, yeah, we kind of made it happen. And like you said, it was through all those passive investment deals that I was investing in.
So this show's going to hurt a little bit for some of us, but we have to just push through the pain to get to the good stuff on the other side. That's great. And it sucks to hear, but that's great. Good for you. But you basically, coming from the physical therapy background, is that correct?
Yeah, I am a physical therapy owner. I had 4 clinics in New Jersey a while back, and then I partnered with a private equity company, and now we have basically about 100. So
Wow.
There's a business background there that wasn't just that I was a physical therapist. I made some moves a while ago, determining that what path I wanted to chart for myself and my family and my life. I knew as a physical therapist there was only a certain number of patients I could treat myself. And then you get, you're tapped out. You can only earn so much. So
Yeah.
I decided long ago that I was going to apply some, business to the business. And I wanted to get to the point of I guess how E-Myth wrote it, working on the business instead of in the business.
Yeah, it's a good move. It's funny. I read that book several years ago. A friend shared that with me, and it was very eye-opening for me where I was at, in my own business, and really, took to it. And then, the pandemic hit and we had to scale a lot of that back because we lost staff, and income dropped big time. We did what we had to do for survival. But it's funny because now it's coming full circle and I'm getting to do it again.
Yes.
And I have like a renewed vision for it this time. So hopefully it will be a little bit more successful. It's a great book. Michael Gerber, right, is the author.
That's it. Yeah. Michael Gerber. Yeah.
If you haven't, and our mutual friend, got to give a shout out to Lance Knob. He's absolutely. He's always talking about that book, and he may have written other stuff as well. But yeah, Lance is always quoting him. And
which, incidentally, I know Lance from physical therapy school.
Right, of course.
We shared a same flat together. Yeah, so we went to PT school together, and we've kept in touch this whole time. And he's doing phenomenal with his business coaching things, and we stay in touch. And he's helping me on some business moves that I'm trying to make as well. So.
Likewise.
Yes.
And it's interesting the way we get into it, right? Like you start your own business, and that's like one aspect of business. It's just like you were saying, there's a pretty low ceiling in terms of how much you can really make if it's just like you have a family run business or something of that nature. It only goes so far, but then you get into like the business, like the real business, the more esoteric stuff. And then you really get to open that ceiling up. And so, back to today's kind of topic is you at a certain point realized there were some wise investment choices. And we kind of, scratched the surface of this yesterday when we were talking that, it is important as a business owner to reinvest in your business to some degree. But when you put all your eggs in that one basket, again, that ceiling kind of drops a little bit lower again. And you really like struck a nerve with me when you were saying that yesterday. It's like, you got to kind of sparse it out. It doesn't have to be, like the quote for today that my mentor gave me, it wasn't like hard math. Like if you have $100,000, put 20,000 here, and 5 different things. But like you were saying yesterday, it has to kind of float and fluctuate where you're investing maybe the majority of your money in your business, but you have some discretionary income to put in whatever you want to, put it into. And then those tides might recede and ebb and flow a little bit where like maybe you're putting less into your business at this point and you're getting to put a little bit more into investment. So I'd really love to like hear personally for my own investment, desires, but really for like, listeners out there who maybe have their own business already and they're trying to figure this out. They're trying to like really understand what to do with the money that they have coming in, and even more so for potentially somebody that's just starting on the journey who has no idea. And they think, like me, when I first started, like I got to put all my money into this thing, like exhaust my savings just to get it up and running. And that can be a hard path to walk.
Yeah. And I was down that same road because I didn't know any better. I was just building my business. And as we all know, as business owners and you're starting off, you're pouring everything you have into that business, which at the time makes a lot of sense. It makes a lot of sense. Who are you going to bet on other than yourself? That's where you're going to get the biggest return. And it does make sense. But if you step back and you say, wait a second, there's these things called mutual funds. And what do? They put money in different places so they can get a blended return and so they can kind of even out the risk. If I do the same thing with my business and I say, you know what, obviously I'm going to pour a lot of money and savings into my business, but maybe I should put money in over here. And maybe I should put a little bit of money over here just to diversify. And the things that I've been enjoying doing is putting it into passive investments where you're also earning cash flow. The main key there is if you're earning, it's great for people who believe in the stock market and they're putting in the stock market and they're saying, yeah, when I'm, 7 years old, I'm going to cash out, and that's going to be my retirement egg. But that's not helping you right now unless you're selling those. But then you got a tax consequence every time that you sell those, so if you're looking for the long term, but how do you know for a fact that when long term comes that the stock market's going to be up and it's not going to be down when you need it? So I started taking a different approach, years and years ago. I started investing in these off-market deals that really you don't hear too much about, and they're passive investments and they give appreciation later, but they're also giving you cash flow right now. And that cash flow right now is what is allowing me to do what I'm doing right now, because it's helping me to also pay my bills, but it's supplementing. And the big point is you want to get to a point where your passive income significantly overtakes your active income. At that point, job optional. Do I feel like working 2 days a week? Do I feel like working 3 days a week? Do what you want to do, but it's an option for you. And as we all know, the best thing in life is having options. When you don't have options, that kind of sucks. So, having that kind of freedom is what I decided that, something I wanted to do. So I've been investing in those type of deals. And,
that should be a t-shirt. You should brand that. Job optional.
God, job optional.
That should be a book title.
Well, when you approach everything from that point of view, that I want passive income, so it's job optional. So and a lot of these investments that I'm doing aren't something that your financial advisor is going to discuss to you about, because there's a couple of reasons for that. One of them is they may not be able to make any money from it, and they have to earn a living too.
Right.
Secondly, they may not know how to evaluate these type of deals. these are not your typical stock market deals. These aren't mentioned in their, they're taking an exam to become a financial advisor. There's certain names for these security exams that they take, but none of these type of investments are even mentioned in there. The structure, after all, these type of investments, you're backing an individual business that has a track history. That's the one I do. I'm backing a horse that has, won other races in the past, and I'm backing them for a preferred return, as well as, some skin in the game. And in some options, each one is structured really differently. Some of them give you cash flow now. Some of them are appreciation, 4 or 5 years from now, and they give you all your money back and you own a piece of the company, which really intrigued me, because when I got started, and Lance can tell you when he got started, and anybody who's a business owner, you put a lot of your effort into that company, right? You're doing from early morning to late night to weekends, you're working on it. In my case, if somebody were to have kind of backed me at that time, they'd be making millions right now, because they backed a horse that was not willing to give up, that was really pushing. So what I'm doing with these deals, and these are syndicated deals. There are known to some people who are in this kind of world of syndication and that looking at these deals. I'm looking at who's the operator, what track history do they have? I look at their financials. So I'm really vetting out the deals. And then I say, you know what? This guy's a really good operator. He knows his space. They've been doing this for a while. I'm going to put my money in with them. And lately, what I've been able to do is, because I've done it for so long and my friends have seen the results that I've been getting, they started jumping in with me. So now that small group has turned into 50 plus people who are investors that jump in with me. And now when I show up for an investment, I'm showing up with a lot of money, and I'm able to help dictate, I don't want to say dictate, I'm able to help negotiate better terms for all of us. Terms with better ROI, so better reimbursement for us, tax mitigation, so they're more tax efficient too, and risk mitigation, so we're not taking so much risk. We're at the highest level of, if anything goes wrong, we get our money first, or something to that degree. So it's those 3 pillars: high ROI, risk mitigation, and tax efficiency that I'm always looking for.
You said the 3 pillars. You've been hanging with my boy Tony D. He talks about the 3 pillars all the time.
Are those 3 pillars? I thought I made them up. I didn't even realize.
Oh man, I got to connect you guys. He was hot on Clubhouse. At the beginning of the year, he's hosting these massive rooms, and it was all about the 3 pillars. He's been talking about it for decades. I worked for him. I started working for him in the early 90s, and we've stayed really close this whole time. And he just hammers it. He's always like, what are your 3 pillars? What are your 3 pillars? Like every new idea I come up with, that's the first question he asks me. And it's like, what are your 3 pillars? Get that in alignment. So it's great.
Kind of makes sense, right? You have to have a pillar to have a foundation. You have to have a foundation. So, if I'm approaching every single investment with those things in mind, thinking, you know what, it has to make sense in these 3 things for me. Yeah. And then only then will I invest. And usually if I'm investing, then I let my friends know, and then they're jumping in too, whoever wants to. So
yeah, beneficial. And what you were saying about, now that you've got this deep group of people, you just really have a lot more leveraging power when you go into these situations and meetings and everything. And
and I'm looking for different types of those investments. They're not all the same either. Some of them are multifamily, some of them are self-storage or ATMs, or multifamilies around the country, or this, a recent one was a wedding venue that has a golf course and a winery, and they're buying multiple properties and they're doing phenomenal. Believe it or not, even during COVID, they did phenomenal. They went from $2.5 million to $12 million during COVID, because they were able to figure out a different source, because they couldn't do weddings. They were doing all these outdoor events, which everybody wanted to attend, because guess what? Nobody could do anything else.
And now they probably have that folded in, and the weddings, and then it's about, the lid's about to, just like New York City, it's about to pop. You can feel it.
That's exactly it. Now that they figured that out, they're like, well, we're not going to get rid of that. We're going to just add that in into what we're already doing. And so they're really, doing great. And we're already looking at purchasing other properties and things like that. So it's some exciting stuff that's happening.
Yeah, it's exciting times for sure. Well, we're going to take our first break. Hang tight, everybody. We'll be back in just a few with more excitement. Stay on the edge of your seat. Welcome back, everybody. If you're just tuning in, again, you're listening to the Entrepreneurial Web. I'm your host, Jeremiah Fox. We're zooming all the way to Hawaii today, talking with investment specialist Amit Gaglani. And in the first segment, we're just kind of laying the foundation for wise ways to spread your wealth around. And you gave me definitely the title for the show for the YouTube version. It's going to be job optional. So he was talking about getting to the point where your side investments surpass your income from say your brick and mortar or whatever your own personal business is, to really give you that option to go into work or spend a month in Hawaii, as he is doing right now. One of the things you said in the last segment, you know, talking about these are investments that your financial advisor is likely not privy to, and that you yourself are the one who's really like vetting the process, and you get personal with the owner. You want to speak to the owner. You want to look at the financials, and the reason I feel like you didn't say it, but I wanted to just see if you agree. The reason you're able to do that is because you've been through that fire yourself with your own business, and you know what to look for because you probably faced, you know, potential catastrophe or you know, like all those things. You've had your back against the wall, so you know what the red flags look like. So when you're talking to the owner and you're getting you know, their feedback, their mannerisms, everything about the way they talk about their business, like you said, you know, if someone would have invested in you, it would have been a big ROI because you were like the horse that just would never quit. It would like, so you're trying to get that sense from them personally on a personal level, just through their body language and everything. But then
you're also their team, the whole bunch. You know, I'm usually there kicking the tires around their business and trying to see those things. But you know what? Not to interrupt you, I got to say,
no, go ahead.
I'm not a financial professional. Like, I'm not anybody. Right. You know, I'm literally somebody who started a business and had to learn step by step everything. I had to learn QuickBooks. I had to learn how to read a financial spreadsheet. I had to understand what a balance sheet is. Mm-hmm. Yeah, these things did not just come. I didn't go to school for that. I have no idea. I'm just a business owner that has over 15 years of business experience, just kind of leveled up every couple of years. I just kept pushing the envelope to kind of level up. And I was able to get my company in a position where somebody wanted to acquire it and saw a lot of value for it. So they were able to pay me. But then I also retained ownership of, smaller ownership of the big, company. So I'm still working day to day in that. But as you can tell, I don't do it at the same pace that I was doing before, because I do still love what I was doing. So I'm not off the grid by any means. I still work and I enjoy what I do. But I take some of the money that I've earned over time and I've been investing in these deals. And like you said, these deals, I call them off-market deals because they're not like highly publicized, things like that. You won't see them in advertisements all over the place. Some of them do tend to advertise. Now, some of them are for what they call accredited investors, which is a whole different definition all to itself, which some people have heard of and some people haven't heard of. But, it's for an investor. Some of these deals are structured that way, and it's the SEC rules, by the way. It's not like the investment wants to do it. It's the SEC says, you know what, we don't want people who've literally saved all their money all their life and don't have enough money coming in to invest on something, because God forbid that goes belly up, then you're out on the street. So they say that these accredited investors, and your listeners, whoever are interested, should look up the term, because honestly, it should be every business person's goal to become an accredited investor, because an accredited investor, by definition, means that they're earning, as an individual, they're earning $200,000 a year, but as a joint family member, they're earning $300,000 a year. These are two different qualifications. A third qualification, it's any one of these, by the way, it's not all of these, or that they have saved enough money to consider their net worth to be $1 million, okay? And that's outside your personal home. So obviously I'm not an accountant, so somebody should look up these terms for themselves. So then the SEC says that these people are allowed to invest in these type of investments. And the main reason is, if they lose some money, they're not going to be out on the street, asking for, handouts. So yes.
Where would one learn more? You said, these are not highly advertised. Like, where really is a place where someone could, besides, just speaking with you directly?
Yeah.
Like, how did you learn about these deals and get involved yourself?
That's a really good question. It's so funny though. When you've done something for so long, it's hard to realize, where did it all start? Like, who
Yeah.
connected you? I know Lance connected me to one of the wedding venue ones, and I was listening to certain podcasts that were talking about it, and then you meet some people there that led me to other podcasts that led me to other people. So honestly, it's a whole connection of different people, and once you're in that circle, it's like you're exposed to it. But a lot of different podcasts that I've listened to. There was a podcast that I started off listening to, which was meant for centimillionaires, which was like family offices. And I think Lance actually told me about that one. Actually, he did. And I started listening to it. So centimillionaires, or families with, hundreds of millions of dollars, they had a podcast on what they're investing in. So it's not their podcast. It's a person who started a company that pitches investments to these type of family offices. So I said, all right, well, let me find out what these guys are investing in. If these guys are $100 million plus, families that are investing in it, and they do their due diligence, I'm not going to create another wheel. Let me just find out.
Right.
So I started listening to those, and I started writing down the investments, and I started researching those investments. And that's kind of how it started for me. That connected me to a whole bunch of other things. And now I just, I'm in those circles. So I guess I get to see those things.
So really, you built it the same way one would build a business. Like, you just got in. There was nobody that was like, here's what you do. You just had to like do your own research. You really had to get scrappy. And I think that's a great lesson, like, for the business owner, aspiring business owner. Like, you got to just get scrappy to get the business off the ground. But then when you're trying to level up, that ambition is still the driving force. Like, nobody's going to do it for you.
No.
I mean, at this point, you're saying you've created this almost like a conglomerate where, like, people can come to you, and you're building this service now where you will advise and take investment money and help people strategically place it. But for you, that wasn't really there, right? You had to build this.
Yeah, to be honest with you, this is not even a business what I'm doing. I'm investing my own money, and my friends just jump in. Those 50 plus people, it's not like I'm taking a fee of anything. Like, I'm investing my own money, so my friends just kind of jump in with me and invest their own money. And they're also very busy professionals. Some of them are healthcare professionals, and they don't have the time to look at this stuff, or they're business owners. And honestly, they don't have time to go through that vetting process because they're so busy in their own business, right? They're spending all their time and energy there. But once they've seen the returns and they're like, okay, well, we know Amit's doing it, so, he ends up doing all the vetting, we'll jump in. Of course they do their own process, but they've already known there's a certain level that's already been done. So, but yeah, that's exactly what I've been doing.
And that's really like the ideal person for this, right? Is like that hustler that's just going and is just like trying to make it happen. They've got some money put aside. They're super busy as it is. Otherwise, they would take this on themselves and just do it. But they're in the trenches and they're just trying to make that move.
And I don't want your listeners to feel like this is rocket science. I mean, at the end of the day, it's really not. This is a business owner that ran his own business, that would talk to his accountant. His accountant would teach him different things, and you would learn over time. And then you knew how your business worked. So you're just applying that same business acumen to somebody else's business, saying, okay, well, if your business is all based on one person, what happens if something happens to you? That may not be. See, that's the risk profile that I may not want to do, because I don't want to base it off of one person. So I also look at their team. Say, how big is your team? Something happens to you. How do I know that your team is going to take over?
Right.
So it's all those things that you look at individually for your own business, that you are looking at for somebody else's business. Like, who's going to handle all this stuff? What are the things that I don't know? And I've visited some of these, actually most of these businesses myself, and I'm kicking the tires around, like in the case of the wedding venue one, and they have restaurants and things. I was talking to the staff. The people there had no idea who I was. They didn't know I was a potential investor. I was just talking to see what I could dig up, and couldn't really find anything, negative. Everybody was just so happy working there, the environment, the culture that they built up. And that's really important too. A lot of businesses, especially when they come to mom and pop, as you may know, it's all dependent on that one person. The culture is themselves, but if somebody is able to take that personal culture and imbue that on their staff, and their staff have, bought into this, and they're drinking the Kool-Aid and they believe in this. Now you got some powerful force there, that's going to be able to generate a lot of money and a lot of goodwill too, which will, generate money as well.
And it's a good point you bring up, because a lot of business owners try to build this like profile on paper for how valuable their business is, and in the hopes of either selling or getting some sort of investment. But if you go around and talk to the staff, everybody's pissed, everybody hates everything, right. Like, communication is terrible, and that's that can cause some red flags. Maybe you get a guy that really just doesn't know what to look for, and it looks good on paper, and they buy or they invest. But I've been in this conversation a number of times, and I advised somebody who was looking to open a restaurant with a goal of selling down the road at some point. And I said, then trick yourself and tell yourself you're not going to sell it. Start your business and build it as if you're going to pass it on to your kid, because that is going to raise the value of it to a degree that you could surpass what you would get on paper. If you're just like, oh, here's our our P&Ls and everything lines up, and that's nice, but like if it's something that this potential buyer or investor wants to keep going in, and the culture sucks, that's a big red flag. That's not a good look. So for those of you listening that are considering that, I think that's a good way. Maybe you do want to sell it, but just trick yourself. It's like it's like getting in shape. It's the same thing. You got to trick yourself to not eat those donuts, even though you want to.
Yeah, right. And you can't see that on paper. You can't read that on paper. The culture, right? You can only really feel that when you're in that environment. So I can tell you that I have gone into those places, and I'm trying to feel that environment. I'm trying to feel like, how is that culture set up? And I knew in that same case for that wedding venue place, you could feel the culture. And then I came to find out that twice a week they actually have meetings regarding building their culture. Mm-hmm. So they're having meetings, and they're really driving that home that, we are hospitality, we are taking care of our guests. And you could really feel that. You could feel that level of, like, it's like a warm blanket around you whenever you walk into their doors, like they're taking care of you. So you feel that if I'm putting my money with a company that cares so much about their staff and their employee, that they're having 2 meetings a week on just, giving that hospitality feel, that they're doing pretty good. It's not just based on one guy running around telling people, hey, do this, do this, do this. And they're really building something to last. And
they will probably treat your investment the same way.
Oh, yes. That's exactly right. And they are very communicative. They're, every quarter, every month, you're seeing communication, you're seeing videos from them saying, fellow partners, this is what's going on now. This is the next thing that we're doing. These are the events. And they invite you over to their events. I went to an event a month ago. It was a golf outing there, and you really feel like, wow, these people are really taking care of your property. It's they call it your property. You're an investor there, but they say, hey, this is your property. So
that's amazing. And this is just like a privately owned business. This is not like a corporation, like major corporation.
Privately owned business. Renault Winery in New Jersey. Yeah.
Yeah. That's a lesson for all of you out there. That's the way to do it. Your percentages for extreme success just go way up if you do it that way.
Yeah, and the guy that's running it, his name is Josh McCallan, and he's a great guy. He's very personable, and he wants you to have a great experience there. But he's also on the business side of it, and he's kind of figured out, like, what, I can only do so much as a one person individual, but when I have this team, we're just unstoppable. And he's developed and put together a pretty big team to take down some pretty big deals too, and they're going after them.
That's great. That's just so great to hear. All right, let's take another break. We'll be back in just a few, everybody. Hang tight. All right, folks, hopping right back into it. Again, today we're talking with Amit Gaglani about wise investment choices. You said something, and you said it to me yesterday, but you also said it earlier, just brushed on it. And I wanted to digress on that a little bit, or get you to, pertaining to the tax situation versus like other sorts of investments. Can you just like elaborate on that a little bit? How, working with some of the investments you're working with, give you just a little bit more elbow room as far as that goes, and leaves a little more money in your pocket.
Yeah. So what I was referring to is some of these investments have some tax efficiencies that are built in. Not every single one, because every single one has its own unique purpose, and think of an investment as its own vehicle. They have certain attributes to it, so you may choose to do it for that attribute. Other investments have other attributes to it for those purposes. For example, some of the multifamily, some of the real estate ones, they pass on something called depreciation, which basically means it's a tax write-off. And in some cases, they give you a K1 is a partnership return that you receive at the end of the year. And when you receive all that money that you've received in payments, at the end of the year, you get a K1 that will say return of capital. When it says return of capital, that means you're not paying taxes on it. It's almost like they're giving you your own money back. Now, they're structured that way specifically for tax efficiencies. Fully legal, nothing is illegal about it. It's structured that way, so you're not paying taxes on that money. Now, when you start making more money than you put in, which takes a little bit of time, that's when you have to start paying taxes. But when you do pay taxes, guess what? You're paying long-term capital gains, which as of now is still way much lower than ordinary income taxes. You know, in some other investments, like let's say certain ATM investments or some other ones, there was something called bonus depreciation. So let's say you've made money through long-term capital gains. Now you got this money that you have to pay the government because you made that money and legitimately you have to pay. But you could take that money now because it's in long-term capital gains and invest it in, let's say, a certain amount of ATMs. So let's say you put in, and I'm just using round numbers, $100,000 you've made, and you're like, okay, well, I don't want to have to pay, you know, the government this money, but what else can I do with it? You know, if you put it into a structure of, let's say, ATMs, you can put in a whole $100,000 and you get 100% depreciation on it. So 100% of that $100,000 gets written off. Okay. And now you put it into ATMs, and those ATMs will spin off a couple $1,000s in cash a month for you for the next 7 years. So that 100,000 now is going to be making you $178,000, you know, and you didn't pay any taxes on it. So it's basically kicking the tax burden down the road. It's not eliminating it fully, right, but every year has its own strategy on how do I decrease taxes this year. So that's what I'm usually looking at too, how to mitigate some of those taxes. Right. So each one of the investments has some of that too.
And this is something you learn too, just hopping in and getting burned a couple times.
Well, as a business owner, when you start making a decent amount of income as a business owner, you realize, wow, how much you're actually paying out in taxes. And it's funny because, you know, when you first get started, you're using that money, right? You're using that money to reinvest in the business. So when it comes tax time, your accountant says, well, now you owe this much money. And you're like, wait a second. How could I owe this much money? I got nothing in my bank account. I have nothing there right now. They're like, yeah, but you earn that money. So now you have to go pay. You're like, yeah, but I just went and reinvested in my business. So I don't have it anymore. And they're like, yeah, but you owe this much to the tax man. You're like, oh man, you know, where's this going to come from? So you kind of figure it out. At a certain point, I was taking the money that I was earning and putting it into a separate bank account so I don't touch it. And that was for tax savings. And then you really get to see, you're like, holy God, I'm spending this much on taxes every quarter. Every quarter it's going away. So now when I'm looking at it, I'm like, yeah, not only do I want a good investment that's paying me a bunch of interest, I want to figure out legal ways not to pay that in taxes. Legal ways. Yeah. You know?
That's the point I really wanted you to get to. And you did a great job of that. Thank you. So yeah, for everybody listening, it's like you're just like all in on your own business, and then you get that slap in the face, and you're just like, how can I at least like negate this? At least like give me some wiggle room, because when it comes, there's nothing you can do about it. And when you only invested in your own business, you have no options.
Now, and I can tell you for a fact, I made mistakes when I first got started, 17 years ago in business, because I wasn't trained in business at all. I was trained to be a physical therapist, and I put all my energy into that. And then I started my own business, and I'm like, oh, I got to put money into marketing. Oh, I got to put money into this. I'm putting money into my own business. And then the tax burden came, and I'm like, oh crap, where's this money going to come from? Because I just spent all that money. I'm like, wait a second, how does that work? I'm like, how does that work? And so I had to learn the hard way. I'm like, wait a second, so I have to go get a loan so I can pay the taxes. But then I have a loan that I got to pay. I'm like, wait a second, how's this working?
And you're barely making money yourself, right? Because you have to,
beginning.
anything that the business is bringing in, you have to pay staff. You have to you still got to pay your rent.
I
Landlord
was
hasn't gone away.
probably making less than what somebody were to make if they were working at like a fast food chain on an hourly basis, because the amount of hours you're putting in, if you boil that down to an hourly basis, you're like, wait a second.
You're like, so I'm getting $6 an hour right now. I own my own business. Where did things go awry?
And my employees are dictating what they want. And I'm like, wait a second, who's working for who? Am I working for them or are they working for me? So early on, you had to figure it out. And I went through all that type of stuff trying to figure it out. But, one thing I would ask your listeners, and it's more of a rhetorical question. And I did this after a certain amount of years because I realized, like, hey, you know what? If I keep doing what I'm doing, I don't know when I would kind of end that kind of rat race. So here's a rhetorical question to ask. Let's say they had $1 million or $2 million, okay, with no future income. What would they do with that $2 million? You and I know, living in New Jersey, New York, in the tri-state area, $1 million, $2 million, probably not going to last you for the rest of your life, right? So what would they do with that money that they know that they have to live on some of it now, but they also have to look out for their future? Remember, the question is, they have $2 million, but they have no future source of income. What would they do with it? Would they keep eating away at that $2 million until they have nothing left? Or would they want to invest in something that's going to give them money now and also give them money in the future, right? And what would that look like? Because if you do it in the stock market, you don't know. It's a roller coaster. It could go up, it could go down. You have no idea. When you need the money, it may not be there. And how are you going to keep pulling money out? You're paying those taxes on it. So it's a good exercise to kind of think of, like, what are investments out there that are going to pay me now, but also going to pay me later? And how can that work? That $2 million doesn't just get burned away.
And when I think I first became aware of you in Lance's clubhouse room, you were largely talking about multifamily real estate investments. So that's one area where you do a lot of work in. And real estate in general is solid because everybody needs somewhere to live. It's kind of like food. Everybody needs to eat.
Housing is good.
Housing is good.
Having a roof, it helps.
But as you pointed out a couple times in the show, there's different ways to disperse that. So it's the difference of you. I've talked about this a lot around here. Like, I ask people the same question because 12-foot wide wood frame homes go for over $1 million in my neighborhood. So that's like, $1 million doesn't get you far. What are you going to rent that out? Like a single family home? How much do you expect to make on it? It's just, it's peanuts. But you're saying take that million that you would spend on one single family home and you can disperse it amongst multiple multifamily homes. Is that correct?
I'm just posing the question, like, what would somebody do with that money? Like, what would they look at? And honestly, that question makes you look at things differently, because if you're earning money and you're making money, you're like, yeah, sure, I'll invest it. Your accountant's saying, hey, at the end of the year, if you're a business owner, did you put into a SEP IRA or a simple IRA? Because, whatever you put in there, then you have to pay less in taxes, which does make sense. But then you're looking after right now, okay, right? Because you're trying to reduce those taxes now. But then also the other side of the coin is, what are you putting it into? Now, even the investments that I do, you can use your retirement account money. People don't realize that. They're like, oh, I have to come up with all this money. I'm like, no, you have retirement account money. You can just make it self-directed and put it into this stuff. The only thing is, you can't use that money because once you start touching it, then you have to pay taxes on it. But it will build in your IRA significantly, fast. And to answer your question, I've done a lot of investing in certain companies that have a good long track history with great ROI in multifamily. They've been in the Philadelphia, New York, New Jersey area, and also in the Florida area. And more recently, I've been also investing in some companies that are like in the Dallas area and different parts of the country. But the multifamilies have given quite a bit of return. And so much so that I've invested with them so many times, and my group has invested with so many times, that now they just give me like preferred rates. So they give us the highest rates. So anybody joining our group, which there's no fee to join our group, literally you're just joining and investing what we're doing. This company might advertise 16%, ROI annually, but for us, they automatically give us 21%. So it's just the power of numbers, right?
Yeah.
It's like you said, we're just able to leverage that. And these are solid, beautiful buildings that they're putting up in great areas that are very, very populated.
Very cool. It's all exciting. It really is. All right, we're going to take one more quick break. We'll come back and we'll wrap this one up. Hang tight, everybody. We'll talk to you in a minute. All right, everybody. Last portion of the show here. We're going to go out with the bang. Again, we're talking to Amit Gaglani all the way from Hawaii, where he's enjoying his month vacation due to his sound investments he's made over the years. And as has been pointed out a few times in the show, what he really does these days is brings friends and other trusted people in to give him more leveraging power in as he was just saying, in terms of multifamily residential, just better rates. It puts more money in everybody's pocket and gives everybody the option, or builds the foundation for them to have the option to go to work or go to Hawaii, which is a great, so something I could get down with. I like that. I like that company. Those are the people I want to surround myself with. So yeah, we have just a few more minutes left. I'm really just curious, like what you've given so much great advice today for people that, may be in this position where they're making money from their own business, but there's really great options for reinvestment that don't hit you with such a heavy tax burden if you're just investing in your own, and just diversifies the way you're getting income to really, set the foundation for those kind of options. What's just another, like, what are some of the pitfalls you would say to avoid for somebody just embarking on that, kind of investment journey?
Yeah, I think you actually mentioned it before, but don't just get all your information from what you read on the paper. And what I mean by paper is their prospectus. Because you can write anything on the prospectus that makes it sound very tantalizing, and also going to somebody's website. As we all know, websites can be created and made pretty easy by smart people to make it look fantastic. Usually what I'm trying to do is dig under the surface to see what, I can't see. I'm doing my own research. I'm finding out from other people. Like, I've contacted banks, who deal with certain companies to find out certain information. I'm just digging around a lot of times to find out what I don't know. Sometimes I find out stuff that's not so great, but then I realize in the scheme of it, it's really not that bad. So there's going to be some things, as people are going through their businesses, that there's bumps in the roads, but it's not all a negative thing. So I guess the takeaway is, don't just believe what you see written.
I would almost be afraid if they didn't have any bumps. Then I'd
Right.
be like, it's coming, and I don't want to be a part of it when it happens. Yeah. A friend of mine, a very dear friend, the one who actually gave me the email, she said, we were just having this discussion one day, and she said, what CEO, like really successful CEO out there, do you think has like never failed? Like, they don't get the job. You want to find that guy that's like got a solid chin, that knows how to take a hit and get, wobbly in the legs and still come back and pull out the win. Like, that's where you want to put your money, not in somebody with this beautiful track record, like no failures. Like, bro, the banana peels are coming. They're coming your way. And I don't want to be tied up with you when it happens necessarily, because we haven't seen you rise to the occasion yet. I think that's another really important thing to look for. Like you said, there's mishaps here and there. You need to assess the degree, like, what were the mishaps? How did they come back from it? And
it's kind of like the stock market. Everybody thought that they were a genius when the stock market is going up. They're like, oh, I'm doing really great in the stock market. Is it you, or is it just the market that's doing really well? So
right.
Yeah.
And do you invest in the stock market as well?
I do a little bit, but over time, I've kind of gotten to the point where I'm like, if I'm doing stock market, it's all long term. I'm not doing anything short term.
Right. And Ray Dalio talks a lot about this, like in terms of investment. It's like similar to what you're saying. You really have to play like some smart long-term investments that you're not touching. You're just not even thinking about that. And then some mid-risk things that may give you some decent ROI in time, not as long as the long term. And then a portion of it in more risky potentially, explosive things, but you also have to be able to walk away from that money.
And then I also dollar cost average it. I don't just put it in one chunk at a time. So I kind of just average it over time, saying these are the ones that I think over time I'm okay with. And honestly, I don't keep looking at it because every month it's going to be invested in. So looking at the stock market and waiting for it to go up is going to drive you crazy. You're going to end up spending way too much energy on that.
Yeah. Nobody got time for that. Yeah. I didn't, just because I had a crypto guy on a couple of weeks ago. I'm curious. What are your thoughts on crypto?
So I've been putting money into crypto, especially for my kids. I said, because you want to get them engaged, right? Kids are at that age where you tell them to put it into, let's say, General Electric, and they're like, come on, that's boring as anything. But then you mention things like crypto, and you put in such a small amount on a monthly basis that honestly, if something were to go totally bad, you'd be totally okay.
Right.
But it gets them excited. And all I'm doing is trying to just get them excited to say, hey, we're putting in $50 a month for you for the next whatever amount of time, and let's just kind of watch it. So me personally, I put some stuff into Bitcoin and some into Ethereum and things like that. And I just kind of roll it every month a little goes in. So nothing much. It's probably, even if it went to the moon, like they say, it really wouldn't, do too much for me that way, but at least we're just kind of, having some fun with it without it hurting.
Yeah. And thinking futuristically, because what was it? El Salvador just made Bitcoin its national currency.
Wow.
Did you know about that?
I heard something, and I was reading something in the Wall Street Journal that, some countries went big in it, but I didn't know what that meant. So I just read the title, but that's what they did. Yeah. Wow, national currency.
Yeah. So they're trying to level up too. It's risky business, but I get it.
And that's the other thing. Bitcoin, Elon Musk tweets something, and all of a sudden Bitcoin is going up. Is it because Bitcoin did something? No, it's because of outside factors. Those are the things that kind of irritate me, when outside factors dictate how a business does. So when I'm investing in a business, of course there's outside factors like Corona that's going to deal with it, but it's not because somebody tweets something like that.
Right. You got to look at what the source. And that was like, again, looking into the, a business, like see how they fared. Now we have a really good assessment of where, how much moxie people really have. Like, how did they do during Corona? Obviously, if they totally folded, you're not investing with them. But really look at, talking to them, seeing where their mental state is in response to it. And also just their financials as well. We have a very good benchmark now for what somebody's response to adversity is going to be like.
Yeah.
Because it's coming. I don't care who you are, what business you're in, it's coming down the pipe. And I really like your suggestion about with crypto, doing it like with your kids. I literally, right before we signed on, I was talking to my 14-year-old about crypto and Bitcoin and investment. And like, she totally was like, ooh, and like, if I would have been like, we're going to invest in, Sears or something like that, I'd be like, what's that, Dad? But when I said crypto and like started talking about like a Bitcoin wallet, like ears perked up, it's like, oh, okay, we have some attention here, because it's hard sometimes getting their attention. It's not so easy. Not so easy. Speaking of attention, got a couple minutes left. I want you to let people know, she, just shared so much great information with us today. It literally like excites me. I'm sure there's other people out there that are excited and probably have questions. Where's the best place for somebody to learn more about you, potentially contact you?
Yeah, so they can email me at my personal email. Somebody said to me, hey, don't give out your personal email. You're going to get tons of people emailing you. I said, I don't mind tons of people emailing me. Although this is not a business and I'm not earning money. I like making connections, because if anybody adds on to my group size, guess what? We all benefit from it. Yeah. So, it's kind of mutual. So my personal email is Gaglani, which is GAGLANI _ AMIT, which is my first name, at hotmail.com. So it's Gaglani _ Amit at hotmail.com.
And I'll drop that in the comments on the Facebook Live as well, so people have it there.
Yeah. I'm on LinkedIn too, but I don't know how easy it is to connect with LinkedIn and things like that. But yeah, they can always,
it's pretty easy. LinkedIn's great. And even a friend of mine was telling me, because he's pretty active on there, if you create a business profile on your LinkedIn, like through LinkedIn, it pops up in SEO. more
Oh,
so
okay.
than like if you created a Facebook page, that's not really going to pop up. But for some reason, those LinkedIn business or group pages get a nice bump, and just
Oh,
like,
nice.
yeah, that, organic search engine. So
So either
something
way,
to do.
whichever is easier for them. My preference would probably be email.
Mhm.
I probably check that more often than I check my LinkedIn account, especially being over here. So yeah.
Yeah, keeping that social media on the DL right there. I look forward to visiting you in Hawaii one day.
Well, we only decided a month over here because we said, well, where else would we want to go for a month? Europe was not an option because it
Yeah.
was cut off. Or otherwise, we would have taken a villa in Italy and just hung out there for a month. But
Yeah, I'll visit you there too. Both are good for me.
all of them.
Well, thank you so much, Amit, man. Really,
Awesome.
really great stuff today. I really appreciate it, and look forward to talking to you in the near future. The rest of you, thank you for tuning in. We'll check in with you next week. Have a great weekend, everybody. Peace
All right.
out.
Take care. Bye, guys.
Thanks.